Gas prices just keep going up here in the U.S. Today, the national average for unleaded gasoline reached $3.58. That's the highest price in almost 2.5 years. The last time gas reached this level was October of '08, right before the financial crisis caused it to fall. Now taking a quick look at gas prices around the United States, California leads the continental U.S. with gas at $4.03 a gallon. Here in New York, it's $3.77. Now let's look at how oil is affecting gas prices. Back in February, our next guest raised his oil price forecast to an average of $101.40 this year. Mike Wittner is head of oil market research at Societe Generale. Sir, welcome to Bloomberg's Bottom Line. Thanks so much for coming on.
Thank you.
Have you changed that forecast at all, given the events, geopolitical events we're seeing?
Yes, we have. Actually, we revised it up by about $9 a barrel just a couple of weeks ago, explicitly to price in the geopolitical risk. We had not taken it into account previously.
Might I ask then, because President Obama gave his speech last night, does that weigh into your forecast going forward, the U.S. role in all of this?
Yeah, I mean, the war in Libya in general is a huge wild card for the oil markets, and our assumption, and I think it's the assumption of the markets in general, is that there's going to be an extended shutdown of crude production and exports from Libya, almost regardless of how the military action plays out. And there's obviously lots of scenarios, but we're factoring that in for a good time to come.
Well, Saudi Arabia has offered to make up for any of that missing Libyan output. Have they been able, at least up until now, to help bring up the slack here?
They have started. It's mainly Saudi Arabia with a little bit of help from Kuwait and the UAE. But we think actually more output from the Saudis and the others is going to be coming this month or next month in April rather than March, because you had planned refinery maintenance in March in Europe. So it took a little bit of the pressure off the Saudis to increase output quickly.
Is there a question at this point, given the events on the ground in Libya, just who is in charge and who's controlling the oil fields?
There is a little bit of a question, especially in recent days, as the rebels have been seen to be regaining a little bit of momentum. The rebels at this point control most of the oil production and the export terminals. The issue is who can they sell the oil to, because you have sanctions in place currently, and most of the customers, the major oil companies, are a little bit leery of actually buying that crude because they're not sure what the legal status is.
And it's interesting because Qatar, the emirate, has said that they might want to act as a go-between in that regard. Does that change the paradigm at all?
It might, because if Qatar does that, in other words, if they say, okay, we'll buy from the Libyans, and then their oil companies resell it to the market as a whole, that would probably be okay in the eyes of the oil market in general and the eyes of most customers.
Let's talk about Japan and the earthquake and the tsunami. What's that going to mean for demand and for prices?
Well, clearly what's happening in Japan as far as economic activity and industrial activity, they're going through a sharp V shape right now, right? So everything is contracting as they're dealing with the immediate aftermath. But at some point in the coming months, we expect a rebound as they get their reconstruction and recovery effort underway. So as far as oil demand, there's less demand now, but we expect more demand in the future.
So at least too early in that regard to say whether this is a bullish or a bearish factor?
Well, the oil markets have, what we've seen in the last couple of weeks since the earthquake is that the oil markets have looked past the downside, and they're looking ahead to the increase in demand. So it's been a little bit bullish for some of the products in Asia. It has not really been a factor at all for crude, and I think that's correct, because in the bigger picture with Libya and with everything else going on in the Middle East and North Africa, I think the Japan story is really a secondary one.
In our last 30 seconds, what are all of these factors going to mean for demand going forward and for gas prices? What can consumers here in the United States expect as the summer driving season looms in the distance?
We think that gasoline prices in the U.S. are probably about as high as they're going to get, because right now we're at the peak of the geopolitical risk premium, and we think that'll gradually fade as the year goes on, and that'll be the key factor.
Interesting, though, because it is, in a sense, it's a tax on on drivers here in the United States, these increasing prices.
It's a tax, and it is a little bit of a danger to the economy, because if consumers and businesses are spending money on energy, they're not spending it on other things, and that's the concern.
All right, Mike Wittner joining us from Societe Generale. Nice to meet you, sir. Thanks so much for coming in. Appreciate it.